You've seen this chart before. You take the signal and the trade went straight into loss. On this Bitcoin chart, I'll show you the exact filter that tells you when to ignore signals and when to act. And if you leave early, you'll miss the single non-negotiable setting that makes this entire strategy work. Now look closely at this Bitcoin chart. Before we talk about entries or signals, I want you to focus on one thing on the screen, the colored ribbon running through price. The ribbon is the foundation of the entire strategy. Everything depends on it. It tells you whether the market even has the conditions to trade and, more importantly, which side of the market you're allowed to be on. As long as this ribbon is green and price candles are forming above it, buyers are in control. This is not an opinion, it's not a prediction. It means price structure and volatility are aligned upward. The market is supporting higher prices. In these conditions, selling is not smart. Even if a sell signal appears, your job is simple. Respect the direction and only look for buy opportunities that agree with it. Now, watch what happens as price moves forward. Candles start slipping below the ribbon, and the moment that happens, the ribbon changes color to red. The color change matters. It tells you control has shifted. Sellers are now in control and the market direction is downtrend. From this point on, buying is no longer allowed and the rules changes immediately. Bias flips with a structure. Now shift your attention below the price chart. You'll see an oscillator. It has two curved colored lines and horizontal levels. When those two lines crosses, buy and sell signals are generated. Those same signals are also drawn directly on the price chart so you can see them clearly. This is exactly where the most traders fail. They treat the signals itself as their strategy. A signal appears and they enter without asking a single question. No direction filter, no strength filter, no risk plan. That's why this part matters more than the signal itself. Look back at the chart. When the ribbon is red, price is below it, the trend is clearly down. That means something very specific. Every buy signal that appears during this phase is ignored. All of them. It doesn't matter how clean it looks or how strong it feels. Counter trend signals work against the strongest pressure in the market, and over time they quietly drain accounts. But here's the next trap. Many traders think that once the trend is down, they should take every sell signal. This is also wrong. Look closely at this sell signal on the oscillator. For a sell signal to be valid, it must occur above +1 level. That level is not random. It acts as a strength filter. A sell signal above that level tells you the market had enough momentum before the signal formed. There's energy behind the move. When sell signals form below the level, momentum is weak, price is often ranging. Follow through is unreliable. Those signals are ignored. In this case, the sell signal forms above the +1 level. That makes it valid, not guaranteed, but qualified. Only now does it deserve attention. Now risk management comes in, and this is non-negotiable. You never risk more than 1% on a single trade. The rule exists to protect you from drawdowns and emotional decision making. Even a solid strategy will lose sometimes. Small losses keep you in control. For the sell trade, a stop loss is placed above the dashed line created by the indicator or above the red ribbon. The placement is logical. If price moves above those levels, the downtrend condition that justified the trade is no longer valid. The stop loss is structural, not emotional. The target is set at least 2 times the risk. This ensures the strategy works even if not every trade wins. As price continues, you'll notice buy signals appearing while the trend is still down. Every single one is skipped. This is not hesitation. This is discipline. Counter trend trades may win occasionally, but over time they destroy consistency. Now move forward again on the chart. Eventually, price moves above the ribbon and the ribbon turns green. The market transitions into an uptrend. From this point on, all sell signals are ignored. Bias shifts completely to buys. But again, not every buy signal qualifies. We only take buy signals that occur below the -1 level on the oscillator. This tells us the signal formed when the market had enough room and strength to move higher. Buy signals above the level often occur late, when momentum is fading. Those are skipped. The same risk rules apply. 1% risk maximum, a stop loss below the dashed line or below the green ribbon, target at least 2 times the risk. The rules never change based on confidence, recent wins or losses. Consistency is where the edge compounds. At this point, the structure should be clear. Direction first, timing second, risk always control, but here's where most traders still fail. The indicators are free. The default settings are the trap. Out-of-the-box indicators produce noise, too many signals, too many color changes, too much temptation to overtrade. This strategy only works when the tools are tuned correctly. The signal generator used here is a 2-pole oscillator created by Big Beluga. The default settings will not work. This is one crucial change. In the Impulse tab, set the filter length to 21. The single adjustment reduces noise while keeping meaningful momentum shifts. The trend identifier used here is the swing arm ATR trend indicator. By default, it clutters the chart and reacts poorly for this structure. In the settings, set the indicator time frame to chart, set the trail type to modified, set the ATR period to 5, set the ATR factor also to 5, then disable Fibonacci entries completely. Then go to the style settings and keep only the plot background options enabled. Disable the rest. Now the chart is clean, direction is clear, signals are filtered, risk is controlled. This is not about predicting the market, it's about alignment, direction plus timing plus discipline. Apply this exactly as shown, hit like if it helped, and subscribe if you want more structured strategies, and I'll see you in the next video. Happy trading!